Hello traders, Gary Wagner with the Gold Forecast here. It's approximately 9 o'clock here in Honolulu, Hawaii, the 17th day of January. It is Monday and this is the Daily Report. Gold, in essence, is trading unchanged today, currently at $13.61. It is up about $4.60. That's due to predominant buying, but we do have some strength in the U.S. dollar, which is giving it equal to a little bit greater of pull, pulling it down about $4.90, giving us a net change currently of about unchanged to down 30 cents. We are looking at a 480-minute candlestick chart. And what you can see is over the last couple of days, of course, this is very, very quiet day trading, and this is the point in which we had these great sell-offs here. But what I'm noticing here is whenever you get what I call an alternating current, meaning you're getting a combination of black, red, that really is a market trying to find itself. Another way to put it, it's in a very narrowly defined trading range and is unable to, at least at this point, break from this small band, this small range of trading. Traders, we are looking at a 60-minute Henkin chart, which is a Japanese average chart. And due to the fact that in the U.S. mainland we do have a holiday today, it is Martin Luther King's official birthday, we do have quiet trading activity. And as you can see, this market, although we do have very, very small green candles, that tells us that the trend, if anything, is weakening. But at the same time, we have very, very quiet activity, and you can see that the market is absolutely range-bound right now between about 1356, that's some of the lows that we had, and the highs at 1366. So we've got this very, very tiny range that the market right now is just trading in between, and we are experiencing a very, very quiet day here in gold. Of course, this is our daily candlestick chart, and as you can see, the activity looks even quieter when we take a look at the candle. Of course, it is just beginning to form, but just as we saw in terms of a micro picture when we looked at the intraday chart, when we look at our daily chart, a couple of things pop out. First of all, we're still dealing with the fact that we've got this major triple top. And because of that, I want to be very, very cautious. We have not been able to take that out. The last stab, we had a very solid buy signal. We're still kind of struggling through this buy signal right in here. The market did go higher, but it no way came close to any of my targets. My first target being 1400, and then seeing how it reacted there, either trailing a stop up or making a decision at that point. But the market very, very quickly came down and began to at least tentatively form some sort of a base after a couple of strong days of selling. The key is going to be this: the market needs to really form a base in this area, and if it's going to continue to push higher, it needs to be able to first take out this small interim top right in here, and then 1400, that's going to be our second target, and then it's got to, of course, be able to come and wrestle with this triple top in here. If it is unable to take out the triple top, there's a distinct possibility that we could be looking at a larger scale correction. If it in fact can come and surpass this top and make new highs, then it's going to be a completely different ball game. But as we go through the week, to me at least, it's critical that we see how the market reacts right in this area, because if it is unable to go and challenge these recent highs, this high in particular here, and psychologically 1400, my belief has always been if a market cannot make new highs, it will certainly attempt to take out and make new lows. Lastly today, I want to look at our same daily chart, but I have converted it into a Henkin or a Japanese average chart. On the Henkin charts, of course, we look for strength of trend, definition of trend, and of course turning points in trends. And as you can see visually it's a very, very easy chart to read when we have these strong trends, whether they be up or down. And very rarely you'll get these candles kind of in the middle of that as a stalling area before it continues. Now, the flip side of that is when we're in a congestion band, we also get these alternating candles, but what we really want to look at is body size, because body size in the Henkin is very, very important. So we had the market come down, we had it go up a little bit, but that's where we had that false start. And in terms of candle size, the candle size right now is diminishing, but what we are getting again is that alternating candle color, which tells me that we have absolute indecisiveness right now in terms of overall direction in the trend. My recommendation, we're certainly not looking to add any positions to our current long at this point. The market, in my belief, is tentative at best. It hasn't proven to me that it has the power to go up right now. It isn't showing me the potential to go down, and I am in a hold in terms of adding a position. We will hold the one position that we have. We will maintain our stops, and I will talk to you tomorrow for another daily review. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.